What's up, traders? Just wanted to do another quick video for anybody out there who might have missed our webinar yesterday. We went over some basic structure analysis and advanced pattern techniques, uh, some tips that you can include into your trading plan to just help you become a better overall trader. One of the things I learned is that it's not always about going for a specific dollar amount whenever you make a trade. The best thing to do is just stay conservative, take the small gains and build your account. You can literally become a consistently profitable trader by sticking to a profitable trading system. How do you know your trading system is profitable? Because you go back and back test it. So I've back tested most of these strategies that I'm about to go over with you guys. And what we got here today is one of my favorite pairs, which is the euro dollar pair. Now, so a lot can be said about this pair. I think it's one of the most volatile pairs out there. They nicknamed it the big dollar because this is where some of the most experienced traders make their money. So I just wanted to show y'all a quick pattern that I saw setting up just before the weekend took place. I saw a pattern setting up where you could have caught a few moves. I'm going to actually draw in, insert some shapes here to make it easier for you to see. We got our starting point here. We restructure there with an outside return there. Structure here with an outside return there, and as you can see, when we got to this point, the market pretty much rolled over. So let's check out these ratios and see what we can find. And another thing I did for you guys is I wanted to show you guys basically a spreadsheet of the different pattern sequences that I've recorded. As you can see, we got the Gartley, the bat, the butterfly, the crab, the cipher, and the ABCD pattern completion. So we'll measure this first retracement and see which pattern is being validated. And you do that by drawing a fib, swing high to swing low. We got a 78.6% retracement on that first one. As you can see, this level here. Yep, 78.6% retracement. I'll reverse this fib really quick. Swing high to swing low. Okay. And from here to here, we get a 61.8% retracement. Okay. So I'm going to go back and see which pattern is being validated. So far, we're setting up for a butterfly pattern, as I can tell. Okay, because our first retracement was 78.6, and when I check back to the spreadsheet, 78.6 can be the very first return of the butterfly pattern, followed by either a 38.2% retracement or anywhere between the 886 for that second one. And as you can see, we landed at the 61.8, so this move is still valid. What we're looking for next is a 127 extension for our CD leg. So we'll measure that and see what we can find. And as you can see, we actually made it right up here to the 127 before the market rolled right over and gave us some pips. And you would have took this trade very, very, very simply. If you would have caught this move setting up, you would have simply placed your sell limit order at that 127 range. Okay, so this green line would have been your sell limit order. Obviously your stop loss would have went just above the 1618. Okay, so this would be a stop level for us, and I'm gonna just color this red, make it easier for y'all to see. Okay, check that out. And your targets would always go at the 38.2% retracement line. Here is our 38.2, and I will color this one green so you can get a better idea of where our targets will be placed. Man, I cannot select this thing. Here we go. So it's really simple. And another thing you would have been paying attention to as a professional trader, you wouldn't just bank on a pinpoint reversal here, especially if you're playing with your money. You want to take a more conservative approach, and you really want to look for more confluence and more confirmation before you make an entry. And now look at the RSI here. We are definitely in oversold range, and we get a little bit of divergence here too, so that would have been more confirmation for me to make an entry, and I would have caught potentially I would have caught 20 pips. Okay, that's a 20 pip move, and you can be a very profitable trader by targeting 75 pips a day, no more. 75 pips a day, and you will find yourself in profit. Like I said, it's about the small gains. It's not about the dollar amount that you're going after. I just found much better results when I stopped being so greedy, because I know what moves the market: fear and greed, you know. And I know it might be some traders out there who say, well, what if I want to collect more profit? You know, what if I don't want to take profit out at this 38.2 range? Well, that's on you, you know. But I have a specific trading system that I stick to, and the market can roll against you at any time. So, like I said, I take a more conservative approach. If you were a trader who, you know, targeted more profit, then you would probably look to open more than one lot, and depends on how comfortable you are with managing more than one lot at a time. Some people, you know, they can catch more profit, and the way you would do that is, after your first target is hit, you would take profits from the first lot, move your stops down. You can either move them down to break even or lock yourself in some profit, which is what I prefer. No trade that goes blue should ever go back red, like ever. Always take your profit. Okay, so you would have moved your stops down, and you would have adjusted the targets accordingly. And obviously in this move here, you would have caught a lot more, but like I said, I don't fret over moves or pips that I might have missed, because I know I'm gonna set up for the next great opportunity, you know. So I'm gonna remove this. We're gonna move over to our next chart. This is another pair of mines that I like to trade. I actually started out with this trade. For those of you out there that know my homeboy Chris over at TNS, when we first got introduced to trading, this pair made us a lot of money. And as y'all can see, I outlined some pivotal structure levels setting up. I think this is a butterfly pattern, but we'll check the ratios just to find out. I'm gonna draw a fib here, down from X to A. And as you can see, our retracement up to B was 38.2. So we'll check back to our reference sheet and let's figure out which patterns are validated with a 38.2 retracement. So far we got the bat pattern. You can see that can be either between 38.2 and 50%. We also have a crab pattern, possibly, and we have a cipher pattern, possibly. All because they can reach a minimum of 38.2. So we'll go back and we'll move that. Actually, I'm gonna draw shapes in here. I just like drawing these triangles. You don't, it's not necessary. You see most people do it, but I understand why now. It just makes it a lot easier for you to actually see the structure being created. Okay, so I'm gonna adjust this fib level here. And we'll move down to our C point. Well, actually, we'll move from A up to the B point. Can y'all see what I'm measuring? I put the first point here down at our A, and I'm measuring the retracement up to B. So as you can see, our second retracement from B down to C gave us a 78.6% retracement. Now we'll go back to our reference sheet and see which charts validates. So this bat pattern here, this bat pattern is still validated as long as it's between 382 and 886. We landed at 786, so the bat pattern is still valid. Our crab pattern as well can land anywhere between the 382 and the 886, so our crab pattern is still valid. We'll move on to see what develops. So I'm gonna move this leg here, there, down to our C, swing the retracement up to our B point, and I'll go back to the chart just to show you guys exactly what we're looking for. So a bat pattern is going to complete at an 886 retracement, and a crab pattern is going to complete at a 1618 retracement. Okay, so we'll see what we set up for. Move this up here. And as y'all can see, when I measure the overall move, our final retracement from C to D gives us an 886 retracement, and that validates our bat pattern. Also, I'm going to show you guys what you would have did if you wanted to make an entry here. I'm going to just draw one more triangle for you. So it's really simple. Like I said, you stick to the same system, back test it, make sure it's profitable, and do the work. You know, as you can see, this pattern is being respected. I actually posted this earlier, so those of you might be following already know, but you definitely had a short opportunity here at this 886 retracement, and also drew additional levels just for added confluence. But as you can see on this bat pattern here, this 886 retracement that we followed up at should also be roughly between a 1618 or a 2618 retracement of the BC leg. So when I say BC leg, that means I'm gonna pull my swing high down to B and swing low here to C. And when we refer back to the chart, what did it tell us? That anywhere in this particular zone here, we would have been expecting a reversal. As long as it's between 1618, which we clearly see it is, and 2618, we have a potential reversal opportunity. So your entry would have obviously went here, at the 886. Your stops would have went above your X leg, slightly above, not too far, slightly above that 2618 range. Okay. And of course your targets would have went down here at the 382. And it's not too late. You can still wait for the double top. If you scroll over to the H1 or the H4 time frame, you'll probably see a double top forming. I wouldn't be surprised. So a conservative approach would be to also wait for that double top before making an entry. So a lot of times this is an opportunity to make an entry twice on the same trade on the same exact levels. You know, I've seen people milk the market that way. We got an opportunity to make some bank here. This move can potentially catch 140 pips. That's a lot. 140 pips, that's a lot. So yeah, guys, this is exactly how you would have took this setup. It's not difficult at all. I'm going to show you guys one more example, if I can remove some of this. Another pair that I really like is the pound dollar. Honestly, I really started paying more attention to this pair, this pound dollar pair, after the Brexit. I made a lot of money after the Brexit, and I usually don't trade news releases, but this was a very good opportunity because, of course, I caught a few patterns setting up. So I saw some very good opportunities to make profit during the whole Brexit phenomenon. So I wanted to show you guys another pattern I saw setting up here, and anybody watching this now, you can. This is the H4 time frame, so it's still a lot of time to get in on this opportunity here. This is an opportunity to go long on the pound dollar pair, and I'm going to show you how. So if I take my fibs and draw it from this swing low to the swing high up here, you can see that our very first retracement came down to this level, which is the golden ratio, 61.8. Now 61.8 has, man, when I look right here, this has been support for a very long time. And anybody who needs added confirmation, you simply would go back and just back test the levels. And I personally, I know when I've identified a critical structure level, because this speaks for itself right here. This speaks for itself. You obviously see support. So, and here again, you see support become resistance. So we got our first retracement there at the 61.8. Now we'll measure our second retracement. I'm going to pull this fib level down here. Swing high to swing low. And when we look back to our charts, you get two 61.8 retracements, just like we did here. As you can see, the market fell just short of that 78.6 zone. So this would be considered a 61.8% retracement. And when we look back to our sheet, if we get a double 61.8 retracement, we are valid for a Gartley pattern. Okay. Also, you are looking for a final return with a CD leg extension of 786. Okay. That could also be a 127 through 1618 of the BC leg return. So we'll test that right now. Swing high here. Down to swing low. This is our BC leg, and as it stated, we look back at that BC leg for our Gartley pattern here. You can see that it can fall between the 127 and 1618. And where are we now? We already hit the 127, but anywhere in this zone, we're expecting a reversal. So I'm gonna look for that original 786 that we talked about. when I measured the overall move. So I'm gonna drop my swing low back here. Just put my swing high back there. And you would be looking to make an entry at this zone here. Okay. Actually, I'm gonna draw some shapes first, just to make it a little easier. Nice Garley setup. Nice Garley setup. Great opportunity right here to make some bank. This should be reversing. I'll give it about maybe 12 noon. We should see a reversal. But who knows? We'll wait and we'll set up for an opportunity. And if you pay attention to my RSI down here, I know this looks kind of crazy because I have the Bull Powers mixed with the RSI. But pay attention to my RSI. It's definitely an oversold area, just below this 30% level down here. So yeah, like I said, I'm expecting a strong move to the upside soon. But if you were looking to take this trade, you would want to put an entry order here in this range. As long as it's between the 786 and the 886, you can be expecting reversal. You'll get yourself a better risk reward ratio if you can actually catch this move down here around the 786. So me taking a conservative approach, I will put it just above the 886. Okay, my buy limit order would be down there. My stops would obviously go right below this leg here. Okay. And where do our targets go? At the 382, baby. Every single time. This is our trading plan. This is what we'll stick to. We're not looking for nothing more because we're not greedy. Remember, fear and greed is the only thing that moves the market. Okay. So our targets would have went there. And this trade can potentially make us 300 pips. 300 pips. So yeah, we got potential to make some money here. So for those of you that's watching this now, still time to set up for this one. But yeah, guys, that's it. I just wanted to do a quick video going over these advanced pattern techniques. Just something for you guys out there to include in your overall trading plan and make you more consistently profitable traders. You guys can do me a favor, give this video a like. Also head over to our Rocks Enterprise page and give us a like. The first 10 people to do it, I'm going to inbox them a promo code, and you will have access to our content on our website where we go over more Forex trading videos. So thanks again, y'all, for watching, and I'll catch y'all later.